What's up, guys? Welcome to another episode of Six Figures to Bigger Figures. This is my story of how I inherited, lost, regained, and will surpass a six-figure net worth. I'm bringing you guys along with me for the journey. All I ask is that you like, share, and subscribe at 6FTBF. All right? Now, before I get started, I just want to say a quick shout out to my struggle bear. Decided to bring this back by popular demand. Don't hate, I know you love it. What I want to talk about today is the stock market.
It's six digits.
A lot of things going on recently as it pertains to the stock market, right? It's been a kind of a not resurgence, but a kind of injection of interest, right? They call it young and stupid money. I want you guys to ignore that, okay? Don't get involved in that. Don't worry about that. They're just hating, okay? And but there's been a lot going on. There's been the stock splits of Apple and Tesla. There's also been, if you want to call it, some down days, right? There's been a downturn, a slight one. But if you look historically at what the numbers do, it's really not that bad, okay? But the media is going to sensationalize it. It's going to look really bad. It's going to get you scared. It's going to get people tied up in their emotions and doing different things, right? Making emotional decisions. And that's what I want to talk about. I want to talk about it very briefly, right? It's not going to be a deep dive. I'm going to keep it high level. But if you're in the market, or if you're thinking about getting into the market, I want to encourage you in that journey, okay? Because this is what we need to do. This is about ownership. And this is exactly what a stock is, right? Stock is just ownership of a company, albeit a very small slice, but it's still ownership of a company, ownership of something, an asset, something that will work for you. And that's where we want to put our money. We're gonna put our money in things that's gonna work for us, okay? Now, just because it's so fresh in our minds, I wanna talk about what happened with Apple and Tesla. These are two well-established companies, what they call big cap companies, right? Very highly valuable companies in which their stock price was what one would consider expensive. It was pretty pricey. And a stock split just takes a stock that already existed and split it into 5, right? Same hand, same value, doesn't do anything different. But now you can buy each one at 1/5 at what it costs prior to that split, right? So there's no change in value. What it is just, it encourages persons who have maybe some sticker shock, or maybe the pricing is a barrier to entry. It creates volume via trades and encourages new investments. But the underlying value of that company does not change. Although, after the announcement of those splits, one would probably argue there was some value created there out of, thin air, the ethos. But if you're into these stocks or into these strategies for the long run, it's a good idea to get into it, right? If it's a strong company, it's a good idea to get into it. For one, I sold my Apple position, made some good money, but I sold my Apple position. Hold that L. We all have L's, right? Lessons, not L's. And I needed an opportunity to get back in. And so for me, that opportunity was the announcement of Apple's split. I said, you know what? Great. I've been wanting to get back in. This is a good opportunity for me to get back in. Apple has cash for days. Okay, they have more cash in some countries. And I feel very comfortable with this company. I'm gonna jump right in. And that's what I decided to do. That worked out well for me. I jumped in at the announcement of the split. I didn't wait until the split actually happened, because it doesn't make a difference, right? So I want you guys to think about. I know some people waited until the actual split happened, but if you like the company, why are you waiting? right? The value doesn't change. And what you, in some cases, you probably missed on that uptick or that ride that happened because of all the media attention and all the news that it was getting, right? So I bought Tesla and I bought Apple at the announcement of the split, and do not regret those decisions at all. Okay, one thing that I did do, my own strategy, I sold my Tesla stock as soon as the split became official. And that was for no other reason than that was just my play, my personal play. So I'm gonna buy this at the announcement, then I'm gonna sell it, and then I wanna get back in. So I'm waiting for an entry point to get back in, okay? Now, if you're in there right now, I know some of us got in and now the stock went down and it seems kind of crazy. You feel you may have felt you made a wrong decision or made a wrong move. What are you doing? You're probably feeling losing confidence. Don't worry about that. All right, it's not nearly as bad as they portrayed on the news. It really isn't. Historically, they're still at highs. Okay, don't panic. This is a long-term play. And that's what I want to make sure I level set with you guys. This is a long-term play. It's ownership for the future, right? This is what an asset is. It gives you a future return, future value. We get caught up in a lot of items that give us immediate returns. That's not how this works. Sometimes it can work that way, but this is not why you're in this, right? You're in this to build your wealth. You're going to be investing in these companies systematically, over time, consistently. Time in the market beats timing the market. Okay? No one can time the market. No one's that smart. Okay? So, well, maybe they are. I don't know. Okay? And people who claim to be that smart, they're lying. Most of them. Okay? So, I want to make sure that we're going about this the right way. And I've seen some things out here. If you're on the fence, still, if you're wondering if you should get involved or not, yes, you should. Now, there's some things I see out here that I want us to be careful on, especially if you're just starting on this, right? The things out there, Forex, options, these things are derivatives, right? So they derive the value from an actual asset, being that the stock. That's the underlying asset, or in the case of Forex, it's currency. These things, they have finite values. There's a strict timeline associated with it. And it's a short-term play, okay? I don't want us getting too involved in these short-term plays right now. Keep it long-term. Get a strong stock that you believe in, something of value, you buy it, and you hold it, okay? I came from a company, a Fortune 50 company, that had an entire department just for foreign exchange. And even they got it wrong. So, I don't know if you think you're just gonna come, 2 days, 2 weeks, and come and kill the Forex game. I don't know, okay? I don't think that's the play, all right? So, the different plays you can go about as far as getting into the market. There are mutual funds, which ID, and there are index funds. Now, the mutual fund is essentially a grouping of stocks that a manager has put together based on their own expertise. It's being actively managed. They're constantly buying and selling stocks in this fund that you then purchase, or you buy into this fund. The idea is that you trust this person's expertise, their management, their decision making, and they're gonna make you money, okay? Juxtaposed to an index fund, in which this is a passive type of investment, same concept, but it's grouped together by some preset of companies, some preset of strategies, something that's not being actively managed. For example, the most popular being the Index 500. So my personal favorite, to be honest. The cost associated with index funds is going to be way lower than it is with the mutual fund because there is no manager with an index fund. Okay. Which one you decide is based on your risk level. And I'll tell you this, 90% of those mutual funds that are out there do not beat the market. They cost more, but they don't perform better. So something to think about. And an ETF is more or less, for all intents and purposes, it's just like an index fund, but it allows you to trade on the market. It trades like a stock, okay? But it's still the same as far as it being a passive type of investment, right? So what should you be getting into? I would say if you're outside of your retirement funds, right? I'm not talking about your retirement funds at work or what have you, 403Bs or 401Ks. I'm talking about actual cash that you have, that you can control. It's been taxed already. You need to do something with it. You need to put it in the vehicle. Those monies, that fund should be going in direct stocks. Okay, I don't want us messing with mutual funds there. I want us to go in direct stocks. This is where you're gonna see the upswings, feel the upswings, ride the course, if you will, get a good feeling of how the stock market works, right? And it's closer, right? The shortest distance between 2 points is a straight line. So I want us having a direct connection, a direct relationship, if you will, as direct as we can with something tangible. In this sense, I mean, it's not really tangible, but in this sense with stocks, okay? If you're putting this money in a mutual fund, it's too passive. Then you're trusting someone else to make the decision for you, right? You're saying that this person is smarter than me, they're gonna make this decision for me. And I trust them so much that I'm gonna pay them X amount of dollars to do it, regardless of how well that fund does, they're gonna get paid money. Did you catch that? Regardless of how well that fund does, they're still gonna get paid. So if it does bad, they get money. If it is good, they get more money. All right? Now, you may be doing this with your retirement fund, but with your stock fund, I don't want us doing that. Direct stocks. Do your own research. It's out there. Start with companies that you would use every day, like Apple, right? Things you hear about, things that look good to you, and then do your research. See how it works. Look at the history. See how it goes up and down. Is it volatile? What type of stock is it? And we have different strategies we can do as well, right? There's a growth strategy and there's a dividend strategy. The growth strategy is essentially you're holding this stock with the intent that it's going to grow in value as you hold on to it. All right, buy today for $10, down the line, hopefully it goes to 100, right? 10x your return. There's also a dividend strategy which just pays you just for holding on to a stock. So you hold on to it, you get a yield of 6-7% each year just for holding on to that stock. Those stocks the price tends to be relatively stable, right? Because it's a dividend strategy. It's really about getting that dividend for holding that stock, right? So you hold my stock, thank you, here you go. And what strategy you choose to employ is dependent on your risk level. Okay, dividends are sure, secure way of getting your money. Growth stocks tend to be a bit more risky, but then you see more of an uptick. So it's on you. Okay, I feel you should do a little of both, right? Build your portfolio. I'm not going to tell you which stocks to invest in, although I have mentioned that before, but I won't tell you it this time because I want you guys to research it on your own, okay? And besides, I don't want to smoke, do your own research, figure it out. It's not nearly as hard as people make it out to be. Trust me on that, okay? And how should you get involved? There are so many companies out there that would love to take your money. That sounds bad, but it's true. It's not that difficult. Make sure you find you a brokerage that's not charging any fees. If there's a brokerage charging you fees right now, today, that there's no one charging fees right now. No one that's worth anything, at least. Merrill Edge, not charging any fees. E-Trade, not charging any fees. Charles Schwab, I don't think they're charging any fees. So get you into a brokerage that's not going to charge you fees, and then start small. Start small, think big, right? And be consistent. We're all learning, and the only way you can learn is to get involved, not to sit on the sidelines. So I don't claim to know everything, but I do know what I know. And I do know that I'm getting better. And I do know that I'm making some money. But I'm not trying to show off or anything. Just trying to show you a vibe. Peace.
It's 6 digits.